Hello, John McConnell with UpsideDownRealEstate.com. We're going to talk about short sales and taxes. I'm a lawyer, so I'm licensed to speak about it. I've done the research. I get questions about this every day. I'm also a realtor. Let me just say, when I'm analyzing short sales and taxes, I do it from two standpoints. One, what's going to happen with the IRS. Two, what's going to happen with the California Franchise Tax Board. Right now, the IRS is a bit easier. You're going to, well, the first thing you might want to do is go to the IRS's website, read Form 982. That's going to bring you up to speed on a lot of this. The next thing you're going to say, hey, is this acquisition debt for a principal residence? If so, I'm going to take the 1099. I'm going to exclude that amount from my taxes. That's going to reduce my basis, and I should be able to deal with that capital gain because 2 of the last 5 years I've lived in the house, and I get to write off up to $500,000 in capital gains. If you've got bigger numbers than that, then, you know, there's a place, anywhere this is, let me say, this is just a place to start. As a lawyer, we can find ways around a lot of laws because they can argue they're ambiguous too. You might as well work this out for yourself. This is just general stuff. I might be a lawyer and I might be familiar with it, but you've got to understand your own situation within it before you apply the advice you read on the net or listen to on the video. So what happens if it's not? What if you've taken money out and it's not the original debt because you've been in the house a long time? Well, then you got to look at the interplay between capital gains and you're going to have some original debt, hopefully, or acquisition debt. Or you also have to consider maybe renting out the property for a period of time so you can convert this over from a debt that you might not be able to exclude to maybe a capital gain and a debt that you can exclude because you're going to have a loss on this investment that matches up with the gain you're going to get reported on your 1099. So again, there's a couple things to look at. You want to look at it, go to Form 982, see if there's ways you can exclude the income, such as insolvency or bankruptcy. See what happens when you exclude the debt, and it probably turns into a basis reduction, which will be a capital gain. And if you don't like what those results are, consider renting out your property for a while so you can convert it to sort of a business expense, and maybe you can write your losses off then. California is much more complicated. If you have purchase money loans under CCP 580B, you might not even want to do a short sale if you are concerned about responsibility for a 6-figure capital gain or whatever your 1099 is going to look like. So definitely figure out what your options are with respect to the Franchise Tax Board before you do a short sale. Just know that they have not, for 2009 yet, as of early April, aligned themselves with the Mortgage Debt Forgiveness Act. So you could be getting yourself hit with a large tax liability. What would I do? One, I'd go to their website and learn about how they treat non-recourse loans versus recourse loans, know the difference between what they do after foreclosure and what they do after a short sale. Also, find out if you do a short sale and you have a non-recourse loan or a CCP 580B loan that would become non-recourse after foreclosure, really push them for an answer about what they're going to do with you if you do a short sale. And then if you are going to do a short sale, make sure you're working with an attorney who's read the tax cases, who understands how you have to compromise the lien and the timing of it so that you have a shot to argue with the Franchise Tax Board. You don't owe any money on the loans for the taxes. So again, it's complicated. Break it down. IRS, Franchise Tax Board. Consider the ways to exclude it. Consider ways to call it a capital gain. Consider ways to recharacterize the entire home ownership situation as a business if that works out for you. Thanks, bye.